one of the things that I've noticed a lot is, when Ronald Reagan was president, he had an economic policy called trickle down, where the very wealthy people, they would give tax breaks to the very wealthy people because they would spend more. And when the wealthy people would spend, it would trickle down throughout the economy. It would provide jobs, and that money out into the economy would trickle down to everyone from the top on down. Well, I want you to think of that in reverse. And what we're seeing right now is a massive, massive drawdown in supply or of product off of the COMEX and the London Metals Exchange. The London Metals Exchange has lost more silver in the month of September, 45,166,000 ounces, than is in the entire registered category of the COMEX right now, which is 38 million ounces. The registered category of the COMEX are the bars that can be delivered. The country of India took possession of about 38 million ounces in August. One country took possession of as much silver as is backing the entire price setting mechanism of the world. The London Metals Exchange in the month of September saw 8 million ounces more delivered, taken off the exchange, than is backing the entire price setting mechanism of the world. The commercial banks have gone long as the managed money has gone massively short, and the commercial banks are still long in silver. The most sophisticated, well-funded, well-informed traders in the world who are always short are now long. The London Metals Exchange has the lowest amount of silver inventories on their exchange that they've ever had since they started keeping records in 2016. The inventories on the registered category, 38 million, the all-time low is 20 million. We're still a ways away from there, but the bleed down from where we were at the beginning of Silver Squeeze to where we are right now, it's like a mountain, straight down at a pace we've never seen before. The open interest, which is contracts that are open, that could say we want delivery, there are 1,802% more of those contracts than there are bars backing them. Now, that's the exact same thing the Hunt brothers saw in 1980. They saw way more paper than there were bars, so they bought all the paper and stood for delivery until the exchange changed the rules on them. But what I am saying to you before I talk about supply in the industry is real. I talk to contacts I have throughout the world, and I'm told that the premiums on the Shanghai Gold Exchange are the highest they've ever been. Same thing in Dubai, highest they've ever been. I did an interview with Mario Mineco 64 yesterday. He's in the United Kingdom, amazing guy, such a nice guy. And he says, you can't find squat in the UK. I just did an interview with a gal in Australia 2 days ago. Can't find squat anywhere. I get emails from people in Australia. They have a Perth Mint there. They're asking me, where can they buy silver? So what you're seeing globally is a realization that inflation is everywhere, that people are afraid. Are we this close to a nuclear war? Are things blowing up all around the world, with the bond market problem in the United Kingdom, with inflation at all-time highs or 40-year highs, with geopolitical strife, with just coming out of lockdowns, all of these things, crime and all this stuff that is just making people uneasy. And so people are waking up to precious metals. Now, I will say one thing before I continue. The price is the greatest tool of misdirection by the people accumulating it. Like whoever the hell is bleeding down COMEX and the LBMA, who took 100 million ounces out of SLV? Well, the authorized participants did over the last 4 months. Who are they? They're the commercial banks. Why are they doing that? Well, maybe they see something that the rest of us don't, because they're closest to the information spigot. They know what's coming. So why, if price is a reflection of demand and of value, why the hell are all of the mecca exchanges where everything starts from the top down, why are they being drained at levels we've never seen? Now let's talk about the wholesale market, the refineries and the mints that I buy from. I had my staff prepare something for me last week. I talked about it a lot on some shows, and since you and I missed our show last week, I'll just, for the sake of your listeners, I'll mention it. I said to my staff, can you give me something to explain to the public how hard it is to get bars right now? And here's what I got. Umicore, my operations manager says, wanted to give you a little synopsis of what we're dealing with to trying to inventory silver and want your people to see. So there are 11 points. Number one, he says, Umicore, which is one of the world's largest precious metals recycling business, is over capacity. They will not take new orders. They've tried for years to get us on board, he says. Asahi, they bought Johnson Matthey. They are a Japanese company, but they make their bars out of Salt Lake City. Asahi won't take any new customers as they can hardly at this point fulfill current demands. Metalor, who wanted our business for years, now can't accept any new accounts. Geiger Mint in Germany, that's my favorite silver bar of all. Geiger Mint bars are incredible. Cannot get any more capacity. It talks about Nadir and IGR, both are Turkish companies, having political issues at the moment, cannot get product out of the country. PAMP Swiss is not getting any new allocations until January. Fortunately, we have some product coming in from an allocation we already bought. I'll have those in stock later this week or early next, some 100-ounce PAMP bars. They're awesome. Valcambi, listen to this one. Valcambi, which has been my go-to over the last 2 years, is holding off new allocations because they are concerned about keeping the lights on this winter. This is a company in Switzerland who's concerned about energy issues, not having enough energy to keep the lights on. They're concerned about that, as they should be. And it says availability this winter, they are not sure they'll be running at full capacity. The Mason Mint, we have some product coming in, but their numbers are very small. US Mint, you know this as well as anyone, and JBR products will be available the soonest in late December. Now, those are all of the major refineries and mints. Now, when you talk about the US Mint, they're the model of inefficiency. Silver Eagles are $16 over spot. Gold Eagles are almost impossible to find. And my cost on them is 4% higher than I've ever sold them for in my career to the public. Disappearing. The Canadian Mint, the Australian Mint, the South African Mint, the United Kingdom Mint, they're all running at full capacity and barely can get anything out of them. And if we're lucky, you'll be talking the first week in January before you get product. So as the price has been falling, the biggest money in the world has been bleeding dry from the top down all of the available metal on the COMEX, the LME, the Shanghai Gold Exchange, Dubai, taking it out of the back door of the ETFs. All of the major refiners and mints, they don't have anything. They're not taking new customers. Thank God I have relationships with many of them, but getting product is next to impossible. And the 6 primary mints of the world, it's hit or miss. I'm telling you, I have never in 33 years seen anything quite like what we are seeing right now. And it's all being accomplished very easily because people believe that price is a reflection of reality. And, you know, we live in a world where it should be, but it ain't. And price is the greatest tool of misdirection. It is the no-look pass in basketball. They manipulate and engineer a price with futures contracts, which creates a reality and allows them where a guy like Robert Kiyosaki, who's probably a cent a millionaire or more, can't even get silver from the guy he's been buying it for 20 years. So what does that tell you? What it tells me is that times are about to get really interesting heading into the midterm and into the end of this year.